Assalamu alaikum.
Well, alaikum salam. How's it going?
All right, man. I gotta get used to all these different backgrounds and stuff.
Oh, isn't it wonderful?
I gotta change them out.
Here comes Rashid 30, 15 minutes early.
Huh?
Rashid's
Rashid,
coming on 15 minutes early. He's logging in now.
no, he's trying to make up for being 2 months late.
Oh, I know.
Yeah, you got a long way to go for that one. Rashid, you not in yet?
No, his audio's not up yet.
All right, that's it, right? Got it done. Rashid, sound like check my background. Look too dressed up. Oh, Oh yeah, but you back here?
Can you hear me?
Yeah.
Okay.
You on?
I'm trying to.
You
Yeah,
on?
I'm trying to get the live feed up,
Oh,
but it may be. I'm hoping it doesn't kick me off of.
you.
Okay. You're not letting me do this. Insufficient authentication. Okay, we'll see. Can you hear me, Adam?
Yeah, I stepped away from it.
Okay.
Now I put my took my video.
Okay, that looks fine.
I don't look too dressy.
No, you're fine.
All right.
Perfect. Perfect.
All right. So did you
I don't know. I'm trying to do it on YouTube, but it
oh
keeps
go ahead and do
telling
it.
it no, it keeps telling me that I didn't it tells me that I'm hooked up, but then it tells me that I didn't authenticate something. So I don't know what I'm doing. But let me try it again real quick.
Okay, take it down.
Let's see. Something like
Alaikum Assalam. What's going on, brother?
Alhamdulillah. Okay. Get this on here. Alhamdulillah. All right. So I got your earlier message.
Oh, no problem.
I'm just now able to break this off. So essentially what I have here will be just an opening with Al-Fatiha, in the Arab, starting with the Arabiya and then going into the English, and welcoming the people to collective conversations, introducing yourself with a brief bio, and then giving let's see, a purpose for today's broadcast. And then I'm going to, but before we get started, I'm going to offer a, I guess like the disclaimer. Then the disclaimer, and then we'll get right into the topic with just some pre comments about the tax season, the W-2, how we tend to treat our refunds, and then I'll go briefly into a brief description of the 5 topics, and I'm going to be sure to stress that they won't be in any particular order, so that you can proceed any way you choose. But those 5 topics are the same ones that we outlined on the flyer of, what you do when you get your hands on a little bit of money, what happens when you decide to monetize your attitude, what do you think would happen if you were to start making informed decisions, what happens should you allow your money to grow, and what happens when you decide to build and manage the assets God has blessed you with. I'm going to ask that for Edward, do you have an idea of the number of people who have already registered?
I don't. Edward's on. He's trying to get Facebook or YouTube.
Assalamu alaikum.
Oh.
It is somewhere in the neighborhood of about 12 people now, because I just had two additional people registered in the last 5 minutes.
Okay. All right. So I'm going to, to ask if there are any, questions, during the presentation for people to raise their hands. For comments, I'm going to suggest they either put them in the chat or they can wait for the later discussion, to hold them to the end.
Let me suggest something.
Yeah.
If they're going to ask questions in the chat, have them directed to you so everybody else can see them.
Okay.
Makes sense? Some people might not want to ask questions. They don't want people to know that they're asking the question. You follow?
Okay. All right. Yeah. All right. Let me just hand. We have a question. And for in chat to me. Okay. All right. And let's see. And then from there, I'm just gonna I'm also going to remind folk that remind folk of the Dhua, prayer that we're scheduled, until 1 o'clock. Being a good 2 hours before Asa, that we'll stop at 12:55 to get in our final announcements, contact information, any closing remarks, etc. And then I have some of the announcements are going to be our next broadcast on February the 17th. I'm assuming we're going to do one on the 24th. I'm also going to announce the 5 consecutive Saturdays starting March 1st through the 29th for our 30-minute Ramadan sessions, and that we'll be, God willing, we'll be returning to our Monday broadcast in April with a host of new topics for collective conversations. And with that, I will turn it over to Adam. And then once he finishes, I will make some closing remarks, reminding people to tune in for Money Sense. I'll remind them again of our collective conversations on Monday evenings, what the topic of that will be. And then I will announce, I have Rashid's program for the Learning Lab, giving that telephone number. And I have every Tuesday starting at 6 o'clock Central Time, 7 Eastern Time, join Rashid Salam for the Learning Lab, the Science of Health and Wealth, 909-318-7171. And those were all the announcements. If there's some others, you all can take, any one of you can take the opportunity to put those announcements in. I sent out an email earlier in the week trying to get any other announcements so I could put them on what I had, but I didn't hear back from anyone, so we're gonna go with that. And any other announcements, people can just make them on their own. So that's how I have
okay.
this.
So our audience is starting to arrive.
Okay.
The first non-board member, about to admit them. So let's wrap this up and get ready to start.
Okay.
Just one other piece of business before I do that. Should I make, which of the two of you, Adam or Talib, should I make the co-host, just in case I have to step away, even for a bathroom break? Which one of the two of you wants to be co-host this morning?
Talib, you want to handle that? Or would that be too much?
I mean, I've never done it. I don't. What would happen? I mean, what?
It really falls down to, if you're co-host, you're going to see things like people's names pop up to be admitted,
Okay.
and things of that nature. People coming in late, potentially.
Mm-hmm.
It's pretty easy. You just hit admit.
Okay.
You see at the bottom of the screen, you see participants.
Yes.
That's where they'll show up. Click on participants right quick.
All right, because I see seven. Seven
at very end.
Right, and there's one by the name of Khalila Shabazz who is waiting to be admitted.
Where is he showing? Okay, I'm not here. You don't see her being. Oh, like he's not.
He's not a co-host yet.
You're a co-host.
Let me make you co-host real quick, and you'll be able to see what he's talking about.
Okay. Yeah, go ahead and do that. Okay. I do see that. Okay. So, and that's how it pops up. So, Bismillah ar-Rahman ar-Rahim. Are we ready to do this?
Edward, have you gave me the ability to share my screen?
Let me do that real quick as well. Yeah. I'm probably going to have to make you also a co-host.
Okay.
So yeah, both of you will have that ability, and I know why you were doing it, Adam. So as far as running the board, Imam Talib, I'll run it.
Sure.
I'll let you know directly in a chat if I have to step away.
Okay.
Okay.
All right. Yes, sir.
All right. So other than that, I think we're good to go.
All right.
We've now got multiple people in the waiting room, which is good. Okay.
All right. Got it.
5, 4, 3, 2, 1.
Bismillah ar-Rahman ar-Rahim. With God's name, the merciful benefactor, the merciful redeemer. You know, whenever we're doing anything of significance and we want the assurances that God is with us, we always say Bismillah, God's name. So we're going to begin from the Holy Quran. We'll open up with Al-Fatiha, followed by the Yusuf Ali translation in English. Bismillah ar-Rahman ar-Rahim. Alhamdulillahi Rabbi Alameen. Ar-Rahman ar-Rahim. Maliki Yawmiddin. Iyaka nabadu wa iyaka nasta'in. Ihdina sirata mustaqim. Sirata alladhina anta ilayhim. Ghayril maghdubi alayhim waladdallin. Ameen. With God's name, the merciful benefactor, the merciful redeemer. Praise be to Allah, the guardian, evolver, cherisher, keeper, sustainer of all the worlds, of all systems of knowledge. The merciful benefactor, the merciful redeemer, master of the day of judgment. To you do we worship, and your aid do we seek. Show us the straight way, the way of those on whom you have bestowed your blessings, those whose portion has not incurred your wrath, nor those who have gone astray. Ameen. God, make it so. So, assalamu alaikum. May God's peace and blessings be with you, and welcome to our first broadcast of Collective Conversations. I'm your host, Imam Taladin Uqda, coming to you live from the nation's capital in Washington, D.C. And I'm joined by our guest and presenter, Imam Adam Beyah of Fayetteville, North Carolina, for this topic-filled and enlightening Graceline community presentation. Assalamu alaikum, Imam Beyah.
Wa alaikum assalam, Imam Talib. Thank you for
and welcome to Graceline's Collective Conversations. For those of you who don't know, Imam Beyah has been in the accounting field since 1977, a past senior accountant at Price Waterhouse and the owner of Beyah's Accounting and Tax Services. He's the host of the long-running program Money Sense, broadcasted live every Thursday morning, 8 a.m. Eastern Standard Time on CWSC's, that is Community-Wide Shura Conference, AM 360, am360.org. The purpose of today's broadcast is to have an open and honest discussion about our financial lives, something we don't talk about often enough, and how here in 2025 going forward, it's affecting you and I right now. We know what it's done to you in the past, but that's the there and then. It's in the past. The bigger question, which we intend to lighten you on today, is how is it affecting you in the here and now? Before we begin, please allow me to get this disclaimer out of the way that the views expressed here today by me, your host, and our guest are our own and not the official position of Graceline Community Incorporated, nor is anything we say here a substitute for professional financial services or legal advice. So, with that out of the way, let's begin from the beginning. How we came to this topic impacts in 2025 your tax refund money. What are you going to do with yours? So we're in this season, this tax season, from now until April the 15th. For those of you who file an extension until October the 15th. And each year the tax season rolls around, we always know what's going to happen. It's a predictor that hasn't changed in decades. We spend it. No sooner than we get it, it's gone. We can't wait for it to come. Some of us file immediately after receiving our W-2. If we get our W-2 in January, we file before the month is out. Things we may typically procrastinate on becomes absent from our vocabulary when we know we're getting money back. We don't care how much it is. We make plans for it. But as my father always taught me, and it bears mentioning again, don't count your chickens before they hatch. So in our collective minds, a refund is a refund, and depending on the amount, it could be a down payment on a new car, a new flat screen, trip to the islands, a new wardrobe, furniture, electronics, something you may want. And now with just a little bit of money, that little extra money you can get, we at Collective Conversations, we want to change that mindset. So in no particular order, we're going to have a collective conversation with Imam Adam Beyah asking what happens when you get your hands on a little bit of money. How do you react when you get money outside of, say, your paycheck? Do you hide it? Don't tell your family, your wife, your kids, anyone about it for whatever reason. Just waiting for what you think is that right moment to spend it. What happens when you decide to monetize your attitude? That is, change your overall relationship with money. We want you to realize that there is a relationship that exists between everything, including your finances. What do you think would happen if you were to start making informed decisions? How you make, keep, save, spend, or blow the money that you do get? What happens should you allow your money to grow? For some of us, saving or investing our money for even an halal return, that is tajara, meaning it's permissible, gives us serious pause. And lastly, what happens when you decide to build and manage the assets God has blessed you with to recognize the opportunity for generational wealth building, that is something to pass on to your children or your community. And with our remaining time here today and the number of people we have on the line, we ask if you have a question, raise your hand or place in the chat to me, Taladin Ukdar, whatever your question is, and I will present it to our guest. And if any one of you says if we say anything that you like, give us the thumbs up. so we know that we're on the right track. As a reminder, for those of us on the East Coast, Dhuhr, that is our midday prayer, comes in just a little after 12:30, but we're scheduled until 1 o'clock, and that's a good 2 hours before Asr, which is our afternoon prayer. We'll stop at 12:55 to get in our final announcements, contact info, and closing remarks. For those who may want to continue with unanswered questions or live comments, some of us from Collective Conversations here at Graceline will stay on the line with a hard stop at 2 o'clock. That is at least 90 minutes before Asr is scheduled to come in, if it pleases God. This is our first broadcast of Collective Conversations, which we will bring to you live each and every Monday evening, inshallah, starting February the 17th, then again on the 24th, 6 p.m. Central Time, 7 o'clock Eastern, 4 Pacific, and 5 Mountain, for 5 consecutive Saturdays, starting March the 1st through March 29th, 11 a.m. Eastern, 10 a.m. Central, 8 a.m. Pacific. We'll be offering 30-minute sessions during the blessed month of Ramadan, God willing. Inshallah, we'll return to our Monday broadcast in April with a host of new topics for Collective Conversations. And with that, Adam, the mic is yours. Where would you like to begin?
Assalamu alaikum, everyone. I want to thank everyone for tuning in or logging in to this workshop. And as Imam Talib said, it's something that we at Graceline community, it's part of our mission statement, which is to empower individuals with knowledge and tools to make sound decisions. So we hope that this is just going along with our mission, and we hope that you can learn something or reinforce something. I'm not saying, I think a lot of people know or have heard, but at least reinforce it so that you can save yourself and your families, which is very important in this environment. I wanted to begin, if I could, reading something from the Quran, an ayat, which I found to be one of my favorite ones when we're talking about becoming self-sufficient. And that's from Surah Al-Baqarah, the 265th Surah of the Quran. And Baqarah is the second chapter of the Quran. We say Surah as Muslims, but the second chapter. And I read it in Arabic and then the English translation. Excuse me. A'udhu billahi minash shaitanir rajim. I seek refuge in God from the evils of shaitan. Bismillahir Rahmanir Rahim. With God's name, the merciful benefactor, the merciful redeemer. And the ayat goes, وَمَثَلُ الَّذِينَ يُنْفِقُونَ أَمْوَالَهُمْ ابْتِغَاءَ مَرْضَاتِ اللَّهِ وَتَثْبِيتًا مِنْ أَنفُسِهِمْ كَمَثَلِ جَنَّاتٍ رَبْوَةٍ أَصْلُهَا وَابِلٌ فَآتَتْ أُكُلَهَا ضِعْفَيْنِ وَلَمْ يُصِبْهَا وَابِلٌ فَتَرَ وَلَهُ بِمَا تَعْمَلُونَ بَصِيرٌ. And the translation, Allah says, the likeness of those who seek The likeness of those who spend their substance seeking to please Allah and to strengthen their souls is as a garden high and fertile. Heavy rain falls on it, but it makes it yield a double increase in harvest. But if it receives not heavy rain, light moisture sufficeth it. Allah seeth well whatever you do. Sadiq al-Azim. Allah speaks the truth, and surely Allah's words are true. I wanted to begin, and as it talks about taxes. And as you know, this is tax season, and some of you might have just a curious interest up until the time you prepare your tax return. But for me, in the next 3 months, it's a way of life. It's a way of life. Not a day goes by, almost not an hour goes by, I don't get calls my office, and they want to come in and get the taxes done. Right? And if they've been clients over a little while, they know they better catch me early. Because as a matter of fact, I don't even do appointments anymore. I just tell them to bring the stuff in, I get it done, and I'll call you when it's done. Or if I have any questions, I'll call you. And a lot of people come early because, as Imam Adam mentioned, they want their refund. They've been waiting all year. And I thought about that. I said, you hear the concept of wealth creation, right? Monetize your attitudes. Refund is not a wealth creation mindset. And let me say that again. Just by the matter of fact that you want a refund shows me that you don't have a conscious awareness of what taxes is all about. Wealthy people do not want refunds. Millionaires don't want refunds. That's not foremost in their thinking. Millionaires don't want to send money out there in the first place. Because if they're wealthy, they make too much money to get the child tax credit. They make too much money to get the earned income credit, right? And if the income is so high, a lot of them can't even itemize. Their itemized deductions are restricted because the income is too high. Well, right now, in today's environment, a lot of people can't itemize because they doubled the standard deduction and removed itemization as an option for many, many people. So as we said, the mindset of wanting a refund is not consistent with somebody that manages their money. I mean, if you look at the tax return, if you look at, and that I say, let's start there. Most people don't even know what a tax return looks like. I'm amazed at the amount of clients that I have that have went to some of the big box, I don't know how to refer to them, big box or established tax preparation people. And I said, well, give me a copy of your last year's return. They don't even have it. I said, bring me a copy of last year's return. And they'll bring me some paper they got from some of the established tax preparing companies. They get a lot of paperwork. They give them paperwork now. They give them paperwork on coupons for next year's work. Or if they cut a deal with some retail establishment, they have coupons to go spend your money and they'll give you X amount or whatever off. And then they'll give you a summary of your tax return. So they don't even know what a tax return looks like. And I'm not saying you on the call don't know that. I'm hoping you do. But if you don't mind, I wanted to share my screen. And let's talk about this idea of refund. If you don't mind. So let me see if I can set that up.
So if you're just joining us, this is Graceline Communities Collective Conversations, and we are joined by our guest, Imam Adam Beyah from Fayetteville, North Carolina.
If I got the right one shared. Hold on a second.
Yeah, we're seeing the W4.
Yeah, I had a screen that had a lot of stuff up there, but anyway, we're done with let me go here. All right, we'll start with this. Okay. So let me
You got it. Yeah. Okay.
now when you come in, if you please put your phone on mute.
Thank you.
Yeah,
Thank you. All right. So we'll start with the W4. Because like I said, most people want a refund. And I'm amazed that I have a lot of course, they're employees. And they have money taken out of their check. Let's say in this scenario, they have $2,000 taken out of their check as a withholding for federal tax, right? Let me come out of this, and I'll come back to this in a minute because I want to show something else too. All right. Okay. All right. Let's say, for an example, a person has a job. They get a W-2. And you excuse me, this is my first time using the whiteboard, so I'm trying to get used to it. This is what's called a whiteboard in a Zoom. Trying to I don't want to draw it. I'm trying to. Can y'all see the whiteboard?
yes, it's there. It's just that. It's a whiteboard.
All right. Okay, there it is. Okay. There it is. Okay, text. Let me get rid of this. Okay. So now, let's say a person makes $45,000. Okay. Let's say that's their income, their taxable income, $45,000. And the tax on that is $4,000 for the sake of this that's the tax now. And they had taken out their W-2, $2,500. All right, which leaves a balance. Somebody's coming in, let them in. That leaves a balance of what, $1,500? That makes sense? So this $1,500 is your balance. This is withholdings. This one is a tax. All right. So they have a $1,500 balance. Let's say they have 2 children, and the 2 children are under 17 years of age, but they get a $2,000 per child tax credit. Is that right? That's what the current is. So the tax credit is $4,000. And because the child tax credit is refundable, well, it's not, it's refundable, which, and here's what a refundable credit means. That once you get a credit, the credits are used to wipe out tax. So the first $1,500 of the child tax credit will wipe out the balance due. The other part comes through as a refund, okay? They got a refund, right? Now, where did that refund come from? Actually, the refund equals the money that the employer took out of their paycheck during the year. Do y'all see that?
Mm-hmm.
Give me a thumbs up if you can't say that. You see that, right?
Yes, sir.
So in other words, if they had not had that money taken out of their check at all, they would have broke even. Makes sense?
Yes,
So
sir.
what they did, they let the government hold $2,500 all year because they didn't need it, right? And there's going to be a lot of people doing that this year because they don't want to buy no Bibles or tennis shoes, so they just let them keep that money, right? That was my one political joke, but I don't worry about it. Anyway, and they were so happy that they got a $2,500 refund.
Right. Right.
But what happened during the year? During the year, they needed some money.
Okay.
And they didn't have enough money. So what did they do? They went and borrowed some money on their credit card, right?
Mm-hmm.
And if you don't know about credit cards, they'll tell you a bold design of what? What's the annual percentage rate? 29%.
On average. Yep.
How do I know? Well, everybody's trying to get me to go use a credit card.
Mm-hmm.
I get every week I get offers in the mail. You can get this new credit card, 0% interest for 6 months. Big, bold, 0% interest. At the bottom of that letter, it says, after 6 months, it's gonna go to 29%.
Yep.
And you know, they be hoping that you don't see that. They're hoping that you don't pay them off. 29%. You understand? So someone goes out and goes in debt to cover money that's been sitting with IRS all year. All right. All under the idea that they want a refund. So I like to go, but I established my own refund. And I tell people, I'll give you a refund. I say, give me $500 every month. And at the end of the year, I'll give you a $4,000 refund. And he said, well, that don't make no sense. I said, well, if it don't make no sense with me, how come it makes sense with IRS? How come that makes sense? Because that's exactly what's happening there.
Yeah, that's what they're doing.
And that's the conversation I have with people that want refunds. Now, what's the remedy? Well, the remedy is we go back to this go back to the screen where they had the W-2, right? W-4. When you get your job, the employer gives you this form. Some of you might have seen it. Or they might send one out every year to give you a chance to change your withholdings.
Right.
Right? So I asked all of my clients, yeah, I saw that. They gave that to me. I said, did they put page 2 in it? No, they didn't give me page 2 instructions.
Nope.
How about page 3?
Nope.
Multiple jobs worksheet. They didn't give me that. How about deduction worksheet? No.
Nope.
How about
Nope.
that one?
No, sir. None of that.
So they didn't give you none of the instructions, but they gave you this part. And people that used to know a little bit about W-4s didn't realize that the W-4 has changed dramatically. It don't ask you how many people in your household like that. It breaks it down, right? And if you have multiple jobs for your wife and your husband or your spouse and yourself, I get in more arguments with people. I don't get in arguments. I stay out of it, but I can see it coming, right? One spouse doesn't have much taken out of their check. The other one does. So they want to know, well, who owes that money? So when they tell me that, I try to end the conversation, you know, because I know it's going to be a problem. I try to end the conversation. I can calculate who owes it, but I don't want to do that because both of them are my friends, you know. And I don't want to make either one of them enemies. But it's hard not to go in that conversation, right? So when they changed the tax law, when they doubled the standard deduction, which is now, I think for a married couple, the standard deduction might be 27,000 or somewhere around there. When they doubled that, it makes it very difficult to itemize. But people are still operating on the old law. Be sure to include the $500 I gave to Goodwill. And I try to explain to them that don't work anymore. Yeah, it used to work. Why don't it work now? So sometimes I just, all right. But the only thing that count in terms of your dependents, married, filing jointly. Now, if you have children, I said under the age of 17, then you get a $2,000 a year child tax credit. So you put that number here. It should be 4,000. And any other dependent you have, you get a $500 credit. So that means that any children you have over 18, $500. Over 17, I mean 17 or older, $500 credit. That goes here. All right. Now, if you have other jobs, then you might want to put an extra amount to withhold to cover that other job. That's it. Right? And that's the change in that. But because people don't get this one right, they end up some owe, or they end up getting big refunds. Right? But for the most part, if you get big refunds, you have to look at it, well, how can I take that into account and free up more of my money to use it on things I need to keep me from going further in debt. Very good, very, very reasonable conversation. All right, so here's the 1040. The current filing year 1040, right? And most of it, you've seen it before. All right. Now, standard deduction. Someone can claim you as a dependent. This is another area for those of you that have dependent children. Here is the advice I give to my clients. If you have a child 18 or younger, or you have a child in college that's under 23, and they have a job, summer job, part-time job, I tell them, take that W-2 from your child and secure it. Do not let them file a return. Now, why do I say that? Because a lot of times when you get people that can file their own returns, and there's all kind of things I didn't invite them to file a return. I think you got Cash App, right? People that have Cash App, and they might have it for business or whatever. A lot of times it's small type businesses. You can click a button with Cash App, and Cash App will file a return for you. Right? But here's what happens with your children. One of their friends did his own return with TurboTax. And on the return, it asks them, can someone claim you as a dependent? And they check no, and they file a return. The first week returns can be filed. And here you come after you get all your stuff together to claim them.
That's right.
And IRS kicks your return back saying one of your dependents has already used that social security number on the return. But they don't realize that they're dependents. My stepson came up to me when he was like 17. And he had his famous emancipation speech. That's what I call her. That's what I called her.
Yes, sir.
I'm a man. I'm a man. Oh, so heck. I didn't argue with her. I said, okay. I said, men pay rent. Men buy their own food. Men have their own cable. They have their own internet service. So I started going down the list, reminding him that he's a dependent, right? So by the time I finished, he caught the drift where I was going. He conceded, yeah, I'm not a man yet. Bingo.
Yes, sir.
Right? So I tell my people, take the W-2 from their hands until you file your return. And I can tell you how much refund he's due. Might have been a couple $100. If you feel bad, then give him a couple $100. Especially had one later, her son did that. She owed $4,700 to IRS. And he only got a $175 refund. But if she claimed him, she would have only owed $1,100. Makes sense?
Sure.
So you come out better, just give him the $100 and something. You can write him a check in red, bold, what do you call those, magic marker, put on top of the check, refund.
Yes, sir.
And we're talking about getting that mindset correct. Monetizing your attitude. I mean, you have to be that way. Because in every move you make, there is a monetary value in it. Right? So you have to have that thought. And I know I'm speaking in general, and alhamdulillah, I might not be touching anyone on this call, but I found it holds true. The concept that the average American lacks an adequate financial education. Right? The average American lacks that. And in order to overcome that, there's nothing that can't be overcome with just a little bit of information. So this is the return on the current filing year. And this 1040 has changed a little bit. They freed up a lot of lines on here, right? And they have them on other schedules, like if you go to 1040 Schedule 1, it says additional income and adjustments to income. So this is where you list the additional income, such as taxable refunds, Schedule C, right? And Schedule C is very important, very important. Because when the only income you have is a job, there's really not a lot you can do unless you do something else. There are no deductions with a job. They used to have a deduction called employee business expenses, right? Whereas if you use your car for your job, you used to be able to write off mileage on Schedule 2106. Well, Schedule 2106 for the most part doesn't exist anymore, right? But on here, Schedule C. And I used to do seminars back in the day. And it was called tax reduction seminars. Right? And these are things that I talked about, the tax benefits of business ownership. See, the tax laws are written for business owners, not employees. And in today's environment, it really holds true that there are a lot of things you can deduct as a business owner you can't deduct as an employee. And when they took that 2106 away, they took that away. It's gone. Even if your employer required you to work from home, right? The home office deduction. If you get a W-2, there is no home office deduction. There's none. Nothing you can do. Because they took employee business expense away. That's why employers, if they require you to work from home, they will cover some of the costs because the IRS won't let you deduct it. I mean, those things are gone, which makes it true that most of the benefits of business, home-based business is you can write things off on your taxes in conducting the business that you can't write off as an employee. So with just a W-2, there's really not a lot you can do. Maybe you can get an IRA, which you should do that, or some kind of retirement plan. That type of stuff. But other than that, you're kind of locked out of it. All right? You're kind of locked out of it. So my advice is to make sure that you pay the least possible tax. Take the tax savings from that you've generated and put that money in and have it grow for you, invest it. That's in today's environment, that's my suggestion to do that. That comes on this side. Make money and save more of your money. Right? That is my suggestion. Okay. I'm gonna open it up. Even when I'm in the seminar setting, I encourage questions from the audience. If you have any questions, you can either raise your hand now or you can type into the chat. Send it to specifically to Imam Talib. Then he can read it off. You can do it that way. Okay, so are there any questions?
Well, one thing I can tell you, I've certainly learned something. Having a 24-year-old son who started filing income taxes, I believe, maybe 3 years ago, and ran across that same example that you gave. That unfortunately, he told me he had filed so that I would not have put myself between a rock and a hard place, and continued to claim him as being a dependent. When in fact he was, because he was still in my house, but I didn't know to as you say, seize his W-2 beforehand. but mashallah, we worked it out, and but I sure wish I had known that, because my refund may have been a bit larger, because it is something that we all look forward to getting. It's just the process of trying to understand, and as you explained, it's really not a refund. It's money that was already there for us. We just need to learn how to take advantage of it, where it's not costing us anything. Now, I can recall a time, and perhaps you can expand on this, a bit, but I recall the time that there were a large number of people who would claim more dependents than what they actually had, so that less money would be taken out. And there was always this hope that no one would ever catch on. That, or there were other people who would claim a large number and then switch later in the year, or vice versa, claim a smaller number, then as the year went on, they would go back. What types of games were those people playing in order to, maximize their refund? I know what it is for you to claim 12 people as being dependent on you, when in fact there only may be 2. And
Well,
yeah, go ahead.
yeah, they're only dealing with a conversation between their employer and themselves. They're taking a W-4, which doesn't go to IRS, it goes to the employer. And the employer knows, based on what you have on the W-4, how to calculate the withholdings that goes on your W-2. You don't actually claim anybody until you file your tax return.
Oh, okay.
So the more that you claim during the year, the less money that comes out of your taxes. And that's a good strategy for people that might be getting a big refund.
Mm-hmm.
And figure the credits, child tax credit, earned income credit, those credits will be enough to offset any taxes they might owe, and they will still get a refund. Mm-hmm. That's exactly the way that should be used.
Okay.
But you have people that claim 0, and if you claim 0, more money is going to come out of your check.
Right. Right.
If you claim 0.
Right.
So that W-4 is just going back and forth to an employer to give an estimate of how much taxes to come out.
Okay.
So there's nothing wrong with that. That's not a game. I mean, I'm not sure what they were doing at the end of the final analysis. It's
Mhm.
only a problem if you claim 12 on your tax return and you don't have 12.
Right. Right. Okay. Makes sense.
Right.
Makes sense. Let's go to Edward. I see your hand up. Go ahead. Take yourself off mute.
Assalamu alaikum. Just prior to my question, just wanted to amplify what Adam just said. The first 12 years of my professional life after I left college, I never prepaid my taxes.
Mhm.
I was an outside salesperson working in the financial services industry. And I basically claimed exempt. Now, let me back up a little bit. So I claimed exempt at the beginning of the year, which meant zero taxes other than Social Security and Medicare were taken out of my check.
Right.
No income taxes at all, withholding were taken out of my check at all. I claimed exempt. And as the year went along, as my earnings increased, part of that would be base, part of it was commissions. About every 3 months, really on a quarterly basis, I would look at what my income was and project my income through the end of the year. And I would determine whether or not I need to go to my W-4 and make any adjustment to that withholding. My goal was to end the year having basically evened out what I would have owed the IRS and what had been withheld from my check.
Mhm.
So when I filed my income taxes, everything was paid. I didn't owe them and they didn't owe me. And if I had a very good year, the money that I had not paid into them, if I was smart, and the old rule was take 12% of your income and put it aside in the savings account that you don't touch, it's just money that you don't see. If I had done that and I'd earned any kind of return on that money, put it in a CD, put it in the stock market, leave it in a savings account, whatever the case may be, I had won. Because as Adam said earlier, the government didn't have my money making money on it. They're going to give me just the basis back without the interest earned.
Mhm.
I would have kept my basis and earned interest on it. Right.
Mhm.
And to a certain extent, even as a business owner, I still try to manipulate the system a little bit like that. And that leads me into my question.
All right.
More and more today, individuals who work a regular full-time job also have a secondary income. A lot of people go to call it a side hustle. In many people's cases, it really is a second business to a certain extent. So there are a couple of different ways, obviously, that if you read newspapers and magazines and all these articles, that people are saying, if you have a whatever side hustle, you should be an LLC, or you should be just a regular sole proprietor or whatever. So Adam, what is your take on setting that side hustle or second income program that you have up as either an LLC or just waiting and filing a Schedule C with your income tax return? Which works better? And are there circumstances where one or the other would work better?
All right. And I get this question all the time. I have people come to my office almost every week and want to form an LLC. And then I had to explain to them that IRS treats LLCs as disregarded entity. Disregarded entity. And what that means is this. If you form a corporation, IRS has a form for corporation. It's the 1120 series. If you form a partnership, IRS has forms for partnerships. It's a 1065. There is no form for LLC. So as far as income tax, LLCs don't mean nothing. If you form an LLC and we have one person that forms an LLC, for tax purposes, this is the form you file. What does it say on the second line of the title? Sole proprietorship. You understand? That's the only form that's the default form if you have a one-person LLC. If you have a multi-person LLC, multi-purpose LLC, it's called a partnership. What's the form number for partnerships? 1065. That's what I mean. I answer like this because I'm all on social media. And you have these guys and ladies and men that have these videos on how to save taxes with an LLC. And they're going to be the experts to tell you how to save your taxes with LLC. As though that really means something. When the IRS already tells us they don't care what the LLC don't mean nothing to them. Be either sole proprietorship, or if it's more than one person, you're a partnership, or you can do like I did with my LLC, right? Go back to my whiteboard again. If I can make it work right. Hold on a sec. What I did with my LLC was, okay. I'm gonna get good at this one day, but I'm not today. What I did with my LLC, I opted through IRS. I fill out the form 2553, I think it is. I feel that form that opted to be taxed like an S corporation. You understand? What does that mean? Instead of being a sole proprietorship, I opted to be taxed as an S corporation. Why did I do that? Well, had I known what I know now, I would have went straight to the S corporation, right? But I thought I was doing something with the LLC. You see down here on line 31? Let's say my net profit from my business is $100,000 as a sole proprietorship, right? Well, I had to pay income tax on the $100,000. Then I also had to pay self-employment tax. No. Self-employment tax, right here. And I don't have Schedule SC, but self-employment tax is 15.3% of that $100,000 with some minor adjustments. So let's say for the sake of this argument, that my self-employment tax is $15,300 plus the income tax, right? On that $100,000 of income. So I decided, okay, I want to be taxed as an S corporation. Now, As an S corporation, all right, there is I don't see it over here. Okay, anyway, trust me. As an S corporation, I would have additional income, right? And that additional income would be, well, I get a step before that. As an S corporation, I pay myself a reasonable salary. It just say pay yourself a reasonable salary. So I got $100,000 income before my salary. And I think it's reasonable that on $100,000 that I pay myself a $25,000 a year salary. That's reasonable. Oh, let's just make it $30,000. A $30,000 a year salary. So with a $30,000 a year salary, now my income, is treated as ordinary income, right? Ordinary income means it's not subject to payroll tax. So I got $30,000 regular salary, earned income, W-2, and I get a $70,000 ordinary income, right? $70,000 ordinary income. So now let's go back over to here. No, is that it? I'm sorry, they change this form every year. All right. Okay. So what I've in effect have done is I had a $15,300 self-employment tax, right? Well, I won't have this because I'm not self-employed. On the $30,000, I have, as an employer, I have to pay FICA and Medicare on the $30,000 at 7.65%. And then as the business, I have to match it